how much fiat currency and credit has been created since the 2008 financial crisis. So a longtime podcast listener put his question in the comments section of one of my videos recently, and I thought I would do this video trying to answer that. And really, to understand this educated guess, this number, and it's going to be on the low end, you have to do a lot of research. You have to look around. You have to try to find different pieces to this global economic puzzle. You have to try to find the liquidity programs, and you have to try to have a global macro analysis, because if you only look at one country, you're missing a lot of the picture. So the mainstream financial media is not going to spend any time whatsoever talking about this. The amount that I hear in the mainstream media, in the mainstream financial media, is normally, if they say anything at all, is normally just the central bank balance sheets. But it's a lot more than that, of how much fiat currency and credit has been created in the global economy since the 2008 financial crisis. So first, before I talk about a lot of specific countries, let me just talk about the central bank balance sheets. So according to Yardeni Research, and you could look this up for free, they release central bank balance sheet, at least their publicly stated balance sheet update, nothing off balance sheet like currency swaps, central bank currency swaps, or anything like that. But this is what central banks are telling the public, that the central bank balance sheets for the Federal Reserve, the European Central Bank, the Bank of Japan, and the People's Bank of China started off around, I believe, $6 trillion approximately in 2008. And now, because the Federal Reserve, with quantitative tightening, has sold around $700 billion worth of assets, their total balance sheet is now a little bit below $20 trillion at $19.6 trillion. So that is a big increase in central bank balance sheet. That was fiat currency that was created out of thin air to buy up assets. And this is why stocks in the United States, bonds, and real estate have done so well for a long time now. In terms of capital gains, you're not getting really any income with bonds. It's very dangerous to try to get income from bonds. But literally, these asset classes are floating not only on an ocean of liquidity, but a tsunami of liquidity. Tens of trillions of dollars increasing in liquidity. Not just an increase in the balance sheets and money supply from central banks, but also credit in many different economies, especially credit increases in the United States and credit increases in China. So my estimate for the number, and I'll talk about the research and the math that gets us there, the estimates of the numbers, but my research, and this is on the low end, of the scale. My high end is just it would blow some of your minds. But the low end of my research is $65 trillion has been created in fiat currency and credit since the 2008 financial crisis. And I'll explain some of that in a minute. So we have the central bank balance sheet increases there pretty substantially. Okay, add that, which is about 13 or 14 trillion, and that's just publicly stated. We don't know how much the People's Bank of China is really printing. We've seen graphs on Bloomberg of their base money supply that have gone basically parabolic, and that's just what Bloomberg knows. That's not the real number, okay? And we've seen estimates for all these other... We have no real estimates for the currency swaps, okay? All we know is the one-time partial audit that Ron Paul got us, the Government Accountability GAO audit that was released in July of 2011 that said $16 trillion in emergency liquidity loans were given out basically interest-free to foreign banks, foreign governments, foreign central banks, foreign corporations, and U.S. multinational corporations. So we're already, if you add up the amount of increasing the central bank balance sheet, fiat currency that was created out of thin air since the 2008 financial crisis, you add that number, you add an increase in corporate debt in the U.S., which was, I have this graph up, it was around $5 trillion or $5.5 trillion in 2008, and it's actually quadrupled, I think, the amount of corporate debt over the last 15 years, but it's about almost doubled from 2008 to today. It's a little over $9 trillion. So you add that number. We're not even going to count the credit card debt increases. We're not going to count the subprime auto loan debt increases in the U.S., the credit card debt increases in the U.S. We're not going to count any of those other real economy credit increases in the U.S. We're just going to count corporate debt increases to that number with central bank balance sheet increases. And then we're going to add that number to the increase in credit in China. And the Chinese economy, if you look up the amount of publicly stated credit that, like the Bank of International Settlements and the IMF and others, and the Institute for International Finance and others have done on the studies of credit in China, that the credit in the Chinese economy, it was very, very low prior to 2008 and 2009 when they did massive amounts of quantitative easing and stimulus programs and their infrastructure spending. So I believe the total credit number in the Chinese economy was around 4 trillion or a little bit even below that. It was very tiny. And within a decade, China now has over $40 trillion worth of credit in their real economy, according to many estimates. So if you add that number of increasing credit from the Chinese economy to what the central banks have officially increased their balance sheets by, just the major 4 central banks, which are the Federal Reserve, the People's Bank of China, the Bank of Japan, and the European Central Bank, and then you add up how much increase in credit the U.S. corporate bond market has had, and you're already at over $60 trillion in an increase in fiat currency and credit. And this is a low end on the estimate, because I'm going to be talking about, guys, even more stuff that has been created out of thin air since 2008. Either it was already there and it increased exponentially, or it was just created as a new program. So the currency swaps were nowhere near those levels. If you add in the currency swaps too, and we don't know the real number, we will probably never find the real number for currency swaps. For central bank to central bank currency swaps, we will probably never get a real number again. There will probably never be a real partial audit ever again. I hope there will be. I wish there were more politicians like Ron Paul, Rand Paul, Thomas Massie, Justin Amash, those types. But the fact of the matter is, Republicans and Democrats, they don't care. They don't want a lot of them are taking money from Wall Street money and military industrial complex, and they don't want this stuff revealed. They don't want it out there about the Catherine Austin Fitts. So if you add what the numbers that Catherine Austin Fitts and Dr. Mark Skidmore, and we don't know how much of that missing $21 trillion, we don't know how much was stolen or created out of thin air after the 2008 financial crisis. The fact of the matter is the paper trail has been disappeared by FASB 56. So on the low end of estimates, you are looking, and I haven't even talked about everything I wanted to talk about. If you add up those things, we are already at over $65 trillion in fiat currency and new credit created since the 2008 financial crisis. An insane amount of money. No wonder asset prices, stock prices, since President Trump won the 2016 election, he talks about this all the time, how he's added $10 trillion of value to the U.S. stock market. And real estate prices in many countries and many major cities with Chinese credit and money has created real estate bubbles in Vancouver, Toronto, Australia, many parts of the United States, Seattle. I could go on and on. So no wonder there is not only an ocean of liquidity floating around, it is a tsunami of liquidity floating around. So let me talk about some of the other large amounts of fiat currency and emergency liquidity and credit creation that has happened since the 2008 financial crisis. And unfortunately, the mainstream media won't talk about this because the mainstream financial media wants to talk about fundamentals for stocks. Stocks are not rising because there's trillions upon trillions of liquidity floating around and flight capital from all this liquidity and credit from other countries coming to the United States. They want fundamental justification for why stock prices are going higher. The corporate debt, I actually saw some research reports. The U.S. corporate debt is increasing at around $1.7 trillion per year now. And a lot of it is rated BBB, which is slightly below junk. So there is a very large amount of that. Nearly, according to this article I saw from May, The triple B category is the largest by debt amount with nearly 3.8 trillion, 77% of which is from non-financial companies. So the amount of growth in debt is insane. I think it's growing at almost a little over 7% per year, the amount of corporate debt. I have articles. I have a handful of articles on just the U.S. corporate debt market. So it's an insane amount of money and fiat currency and credit that has been created since the 2008 financial crisis. So Jeffrey Snyder, I respect him a lot. I think he's very intelligent, but unfortunately he sees all markets, including the gold market, through euro-dollar colored glasses. So his explanations for the gold price moving up or down, he says there is no manipulation and that the euro-dollar causes all moves in the gold price. He says the euro-dollar causes the Chinese credit bubble. He says the euro-dollar causes all these things. But I've looked at estimates for credit markets, and a lot of that debt in the Chinese economy, not all of it is dollar-denominated debt. There's also a lot of RMB debt. And then that RMB debt is not always misallocated in China. A lot of it is also laundered out of the country. And according to my sources, some of the sources I've spoken to about China, that the People's Bank of China is doing nonstop QE, quantitative easing, that they've been printing, increasing the money supply. So not only has there been a credit bubble from the local government finance vehicles borrowing that they weren't supposed to borrow. Listen to my superb Denny McMahon interview. He's the author of China's Great Wall of Debt. And if you have not read the book, I highly recommend it. So not only that, but the money supply, the base money supply in China is also increasing. It's almost parabolic, and that's even with a chart from Bloomberg, which is probably not even the real number. Because with Bloomberg, I think Bloomberg loves the Chinese government now, because if you talk to Kyle Bass and Emma Mollman, they've basically said that Michael Bloomberg gave the Chinese government an extra $3 or $4 trillion recently by moving Chinese state-owned enterprise bonds into their global bond fund index, and that moves a lot of American investor money to China, to the Chinese government. So I don't know how much you can rely on a lot of Bloomberg's coverage of China, because there's an enormous bias there. There's a lot of people that were upset that the Chinese state-owned enterprises bonds were moved into the global bond index fund. No, inflation. So there is inflation now. A lot of this monetary inflation and credit, a lot of it has been moved into asset prices. So the real economy, we are getting bad stagflation, but we have not gotten hyperinflation. But there is a very good argument, especially if you look at other metrics besides price to earnings ratios for stocks, that the stock market is grossly overvalued. So like price to sales and other metrics, the stock market is grossly overvalued. If you just look at price to earnings ratios, it doesn't look that overvalued, but that's misleading because of all the share buybacks. And a lot of these corporations have not really grown revenues, that a lot of them instead have loaded their balance sheets with debt because debt was cheap. So with financial repression and artificially low manipulated interest rates by the central banks, the corporations, a lot of them, whether it was in Europe or the US, could go in and borrow cheaply, and they did. And then that's why you have a situation where in November and December, where there was the rate hikes by Jerome Powell, and it almost broke the corporate bond market and the junk bond market. There was over 2 weeks of no issuances of corporate debt, and that has since increased again. So this is I can't predict exactly when this thing's going to end, but this is clearly unsustainable. So the people out there like Richard Duncan, and he talks about creditism, and he says that like the central banks and the governments should just print off $100 trillion and spend it more wisely on like new research and development for like nanotechnology and other things. I mean, almost, if you want to talk about the high-end estimates of some of these numbers, if you add in the euro-dollar market with Jeffrey Snyder, which I'm gonna quote his estimates. He says $16 trillion. If you want to hear his estimates, go listen to Euro-Dollar Seasons 1 and 2 on Macro Voices for free. Again, I really respect Jeffrey Snyder. I just disagree with him that the Euro-Dollar is so important that it determines every single market, including the gold market, all the credit markets in every other country. I disagree with him about that. But I think his research on the euro dollar itself is really good. I just don't think the euro dollar, being that it's $16 trillion, and I don't know how many derivatives are attached to the euro dollar. The massive amount of over-the-counter derivatives are actually attached to interest rate swaps. That's where I think the majority of the over-the-counter derivatives are. And the over-the-counter derivatives, guys, a lot of these, what I would add, and this is another reason why we haven't had hyperinflation yet in the real economy, is a lot of that monetary inflation and credit and emergency liquidity programs with currency swaps, not necessarily credit, but money creation, fiat currency creation, and the emergency liquidity programs in the trillions. A lot of that has gone into putting out fires in the over-the-counter derivatives market. So that money, a lot of it that has been created since 2008, it was not spent necessarily into the real economy. Some of it was put into asset prices, a large chunk of it, into real estate and bonds and stocks, but not necessarily into like consumer items. So another source of liquidity that large borrowing is the yen carry trade. So I have an explanation here, a really good article from June of this year, June 25th, talking about the yen carry trade, what it is, and basically the Japanese economy has around $15 trillion in savings, and the Japanese banks allow foreign investors, so currency traders, hedge fund managers, investment bankers from outside Japan, to borrow the yen very cheaply, use leverage. And what these currency traders are doing is they're betting that the yen will weaken, and then they're trying to either go and buy bonds in another currency that gives them an interest rate, or I think my educated guess is a lot of that yen carry trade money, according to this article, it says that there's still around $500 billion if the yen carry trade open. I don't know. I haven't seen any other estimates of the exact amount of the yen carry trade. So we'll just use this article as $500 billion. Yen carry trade grew up to $500 billion. And then that $500 billion of the yen carry trade was then leveraged up and probably used now to go buy regular stock market indexes here in the United States. So just an insane, so if I could summarize more of the points here, getting to that $65 trillion estimate. And by the way, I've spoken about this with Jim Rickards. We've talked about this in the past. I think like on Twitter, I've spoken with him years ago about this. I don't think, now that he's going on his book tour for Aftermath, I doubt, he was just on Yahoo Finance yesterday, I doubt he will discuss any of this. They won't let him. I don't even know if he talked about currency swaps on Yahoo Finance. They might have just said, you can't prove that. Thank you very much for the 2 super chats, guys, for the $25 and the $2. Much appreciated. So when you look at these different types of things, whether it's emerging markets massively increasing, let me see if I can find the article I just pulled up right before I started this live stream show on emerging market debt. So emerging market US dollar denominated debt increased exponentially from $642 billion in 1990 to over $22.17 trillion in the next decade. In the following years, as US dollar denominated debt increased, many of the currencies in the indebted countries fell in value against the dollar, especially as Washington increased interest rates. So this hasn't happened recently with the interest rates increasing. This article is from last year, but it talks about how there's, as of late 2017, interest on U.S. dollars outside the United States reached a staggering $11.4 trillion. This is a record amount of debt in the documented history of the financial community. So there's been, according to different estimates, over $10 trillion of emerging market debt borrowed in U.S. dollar denominated debt that has been borrowed since 2008. That's a lot. Whether that's all through the euro-dollar market or not, I don't know. Because Jeffrey Snyder has said that the euro-dollar market is $16 trillion. And none of the articles I could find said the estimates were the exact amount of the euro-dollar. So I see a lot of comments here. The people on Main Street, most of them, unfortunately, have not benefited from all this money and credit creation. Very few people. And this is why. Most people on Main Street in the United States and in Europe do not have a lot of savings. Some people might have a retirement account, so they may have benefited from stocks. Maybe their home price went up. But the majority of people do not own a large portfolio of investments, including stocks, bonds, and real estate. So the people who owned a large portfolio of investments of stocks, bonds, and real estate, they have immensely benefited from all of this money, and fiat currency, and credit creation since 2008. So adding up that $65 trillion number, you start with the central bank balance sheets increasing, and that's just on balance sheet, okay? That's just publicly stated. That's not counting the currency swaps, okay? Off balance sheet, the currency swaps are not counted, and there's no transparency there unless we get audits, which I recommend you talk to your Republican or Democrat congressman or congresswoman, and you tell them that we would like more audits. I doubt it'll happen again, but at least as we're trying, because that's how we got the one-time partial audit. Remember, I asked Ron Paul about that when I interviewed him a couple weeks ago. Bill, it's Wild Bill from Odessa. It's killing us slowly. We're getting killed with stagflation in the real economy and taxes. Your income's not going up. Your income is not keeping up with inflation and taxes. So the people on Main Street are not benefiting from this. Not unless you own a lot of asset prices. And then gold and silver manipulated, and cryptocurrencies have been going crazy for years now. There is an excellent article from about 20 years ago by Peter Warburton. I think it's Warburton. He was an economist in England. He worked in the investment banking industry for a while. He was involved in designing some of these over-the-counter derivatives. He talks, I think the article's on gold-eagle.com. It's in the archives. GATA may have it. Gold Antitrust Action Committee may have it in the archives. And it talks about how the over-the-counter derivatives market was used to move a lot of that monetary inflation to prevent hyperinflation and delay it. So not as much of the monetary inflation hits the real economy. And the derivatives market, the over-the-counter derivatives market, was used to slow down commodity prices increasing rapidly like crazy, to delay hyperinflation. Not that's your surprise face, as in not even a single iota of surprise. Well, I haven't seen, boring name, I haven't seen anyone else go and do the math with the estimates. So if you add in the Catherine Austin Fitts and Dr. Mark Skidmore number, the 21 trillion, if you add in the euro dollar market, if you add in the emerging market debt that has been created to the central bank balance sheet expansion, the increase in the U.S. corporate bond market, and the explosion really of credit in China, which is $40 trillion in just the last decade, the numbers, you start to see that basically the high-end estimates would be around $100 trillion. And I'm not even counting increases in credit in Australia and Canada or Japan. So you start to see that an insane amount of monetary inflation and credit has been created since the 2008 financial crisis. And you just don't see anyone out there, at least I haven't in the gold community or the alternative media, go and try to do the math. So I would say the low-end estimate would be at least 65 trillion. Jim Rickards has agreed with me on that in the past years ago. And the high-end estimate could be $100 trillion or more created since 2008. And the reason we have not had hyperinflation is a lot of that monetary inflation and credit has not gone into the real economy. A lot of it has gone into asset prices. A lot of the emergency liquidity programs like currency swaps has gone into putting out fires in the over-the-counter derivatives markets. So that's how they managed to keep the game going, with stagflate and tax and lie. Most people don't care about any of the stuff I just discussed. Most people are too busy trying to put food on the table, or they're distracted by bread and circus, or they don't care. They don't know, they don't care. or they believe in the system like those brainwashed Keynesians who are running these central banks. They believe. They 100% drink the Kool-Aid. So someone said the Federal Reserve doesn't make mistakes. All the people at the Federal Reserve, including Ben Bernanke, Janet Yellen, Alan Greenspan, they all made a lot of mistakes. Tons and tons of mistakes. They almost collapsed everything. They had to change the rules during 2008 and 9. The rules had to be changed. So the emergency liquidity programs have been saving the European banks and been putting out fires in the over-the-counter derivatives markets for the last decade. The unfunded liabilities, though, they haven't said that they're going to bail everything out, so we don't know. There may only be some bailouts. So if the Republicans are in Congress, then Republican pension funds may get bailed out, and if Democrats control Congress, then pension funds run by Democrats or unions may get bailed out. There was an article that came out in the last month that already showed that that may be happening. Boring name, get a second and third job, but then people are going to get sick and then people can't sleep. It's going to be a disaster. You can't just keep getting second, third, fourth jobs. I know people who have 2 or 3 jobs who are not sleeping, and they're not sick yet. They haven't put on 50 pounds. They're not sick yet, but it will happen. If you're burning the candle at both ends, it will happen. I think that's what a lot of people are doing. I think a lot of this is part of a global depopulation strategy. So stagflate and tax and lie is part of a global depopulation strategy. Asset prices are strong, but they're floating on a tsunami of liquidity. Look, the Chinese stock market crashed last year, right? And in, December, the Chinese government stepped in with over $800 billion worth of quantitative easing, and the Chinese stock market rallied. Is it any surprise that the Chinese stock market rallied? Dennis says, Jim Rickards said 22 trillion is not missing. Yeah, but Jim Rickards also agreed with me on the 65 trillion number. So you're not going to agree with everyone on everything. That's just not how it works. So I respect a good amount of Jim Rickards' work. I just bought Aftermath. I haven't read it yet. I have it on audiobook. I didn't read it yet. So just a crazy amount of monetary inflation and credit since the 2008 financial crisis. A mind-blowing amount. And yet here are the MMT people, and so they are saying that we should print even more money and tax rich people, and then the people on the main street should get that money and credit instead. Well, that's what's going to be the recipe then probably for hyperinflation. Because it's going to go from stagflation now, worse stagflation increasing even without the MMT people, and things are just going to ramp up. Because then the people on Main Street, they're either going to, some of them are going to pay off their debt with the money, but others are going to spend the money. And then once the money's spent on consumer products, that's when things really start to roll with the velocity of money. You have not had the velocity of money on Main Street increase yet. And MMT would be that match, that spark. Because I've been talking about this analogy for years. These central banks, what they've been doing since 2008 is dousing everything in gasoline, and the velocity of money is the spark or the match. So there has not been velocity of money in the real economy, and that is what has kept things in stagflation and increasing stagflation instead of hyperinflation. So as that velocity of money, as the consumer starts to spend that money that they would get in MMT or the Andrew Yang $1,000 per month or $2,000, God knows what they'll decide to do. And then there is your velocity of money increasing, picking up. That is your match. That is your spark. And we don't know what happened to that $21 trillion. It could have already been spent. It could have been spent $2 trillion per year already. We don't know. It could have been used in 2008 for something. We don't know. There's no audit. We don't know. I doubt that because the people in power know what is happening to the currencies, I doubt that they're holding cash on that. I think that money, that 21 trillion, was long spent. Platinum and palladium, there are not good ways for retail investors to play platinum and palladium. If you're familiar with geology, platinum and palladium are byproducts. So there are no primary platinum and palladium miners. There are, I think, doesn't Sprott have a physical platinum trust or a physical palladium trust? You're not going to get any leverage on that. I believe Sprott. The money velocity hasn't increased rapidly yet. We haven't had that big money velocity increasing. We haven't had a big increase in money velocity. If you look at the money velocity that the Federal Reserve tracks, it's been collapsing for the last 10 years or so. I haven't seen a rebound the last time I looked at a velocity of money chart. Okay, well, let me check my notes and make sure I covered everything. Yeah, so I didn't look up how much the European private bond market has increased, but that would just add to my argument that the low-end estimate would be over $65 trillion of new fiat currency and credit created since 2008. I am sure that there was an increase in corporate bonds and private business debt in the European Union since 2008. And I think that my educated guess is that a lot of that $15 trillion in savings in Japan has been leveraged by hedge funds, investment banks, private equity has been used in some type of trade, leverage trade for big bets besides just the yen carry trade outside of Japan. Which means that they leveraged up, which means that they created more debt and more credit to make more bets on assets. Get out of the dollar while you still can. Well, what's better than the dollar right now? All these fiat currencies suck. Why do you think so many people in China now are using Bitcoin? A lot of people, I can tell you this because I've spoken with people in China, a lot of people in China don't trust the RMB either. The euro is bad too. The Japanese yen hasn't collapsed yet. Everyone keeps predicting the Japanese yen is going to collapse. If you look at a chart on the Japanese yen, it looks like it's very heavily manipulated. It doesn't normally move too much. A country would be very stupid to back their currency with physical gold if they are the only country in a gold standard. You know why? Because then you're going to see all these rich people go there and try to pull out gold. One country going to gold would be very, very dumb. Own it yourself, but I don't see a country going to a gold standard, especially just one country. There would be a big drain in gold out of that country very, very quickly. It would be very similar to what happened when President Richard Nixon closed the gold window. How so much gold left the United States so quickly. Well, Bill from Odessa says, Jason, like Robert Kiyosaki says, the poor work for money and the poor also get taxed a lot because a lot of taxes come out of their paycheck. And because they consume the most, they get the worst of stagflation and taxes. The rich work for assets. It's cash flow with zero taxes that makes the rich rich. Yes, and the smart way to use debt is to buy more cash flow, which is not happening in the Chinese economy, by the way. You're seeing a lot of credit and debt used on speculation, not for cash flow. Speculation for higher real estate prices on empty concrete shells. Speculation on building skyscrapers. Speculation on building homes, on building office buildings, on building towns. The smart way to use debt is like Robert Kiyosaki says, or what Nolan Watson does at Sandstorm Gold. Debt is used for either immediate cash flow or near-term cash flow, and then once the cash flow comes online, the debt is paid off. And you could do that as long as you don't borrow too much debt. You're using a sizable amount of debt, but you're using it smartly, and then you pay it off. That's the way to use cash flow. To use debt. Use credit or debt for more cash flow. Rinse, recycle, repeat. That's how real estate investors, the rental property owners, keep on buying more and more rental properties. Okay, well, I think I covered everything. I'll attach links to all these articles. I have a bunch of them. So I have 1, 2, 3, 4, 5, 6, and then another 5. There's about 10 articles, and then the Peter Warburton article. So I think that's it for today. I didn't want to spend all this time doing this, but I didn't want to spend even more time going into all the crazy details. But I think I've laid out the case where at least $65 trillion in fiat currency and credit has been created since 2008. And I have not seen anyone else in the gold community or anyone else in the alternative media name this number and then cite the different pieces to the puzzle, whether it's an emergency liquidity program like the central bank currency swaps, or credit increases in the U.S. corporate bond market, or in China in the real economy, or an increase in central bank balance sheets, and then combine all these pieces to the puzzle to give you guys an actual number based on, my research. Okay, guys, well, that's it for right now. I'm going to go eat dinner and go relax. I may go out for a drink later. Okay, bye.